Chat, we're really going to need your help today. There's nothing going on in the markets. Wrong. We got everything going on. Tariff exemption rally, earnings, Craig Johnson, 835. I'm not going to talk anymore. We're going to start pre-market prep right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, green on the board, up 36 3/4 handles, 64.0750, 20 handles off the pre-market high, but I'm not calling any tops in this market. We have the dollar showing a little flat, 98.03, TLT down 21 cents, trying to maintain those gains from last week. USO's up 72 cents, big bar yesterday, but on the rebound, 74.51. GLD up 65 cents, 311.15. SLV, that's the big winner, up 1.46%. At 34.86. Bitcoin does not want to be left out of this rally. Up $1,500. Those are the futures at 117,300. So Triple D, like, how's your neck, man? Because last night you must have been all over the place with the news and the earnings and everything. Whew, what a night.
Yeah, random news everywhere, but Trump is all that matters here right now. And obviously we had the news earlier in the day that Apple was going to do a huge investment in the US. You know, we get the details. Tim Cook meeting Trump at the White House. They have the big meeting. What was interesting, and the Brandster, let's bring him on this too, because we were covering everything live in the STN room. And we had, you know, you were reading off of the press release with all those companies that, when did that drop? At 4:30?
Looking right now,
release from Apple.
4:40. It was 4:40 p.m. Eastern time.
4:40 p.m. The press release drops with details on the Apple investment, and you were flying through it like a champion, giving us all those names that were in there. Talking about, obviously, GLW was the one that was right at the top, Corning. But then there was, you know, COHR you were talking about, and Applied Materials you were talking about, and Texas Instruments you were talking about, and GFS you were talking about, and MP Materials, all mentioned. There was, I think, 10 companies that were in there.
You just killed that list. You got that list almost in order.
I can't even write them down.
I remember because we were making money off of it.
The only two you didn't mention were Amcor, AMKR, and Broadcom, AVGO.
And so that comes out, and these stocks pop, but a lot of them really didn't. You know, GLW really popped, and you can see it, Joel. You know,
I'll get it
here on GLW, and it popped big time on that release, and then it pulled back in, and then there was crickets from all those other companies. They were up a little bit, but like MP was barely up. And, you know, we were talking about the potential for, you know, this to actually, like, these stocks to go up, you know, if they were to get a mention. And they indeed, you know, then we get to the press conference and Trump starts talking and he starts mentioning some of these companies and they just start exploding. And I'm like, are you kidding me? This is 45 minutes after the press release on this information. Trump just saying the names of these companies and they all start exploding. Same thing, Cook comes in, specifically mentions MP again, which Apple did twice on the conference call, and MP explodes $5. So that was my best trade of the night. I know Big Bill D in the STN room was thanking you, Brent, for bringing that out, because MP had a 45-minute window. It was in the press release, barely up, and then it gets announced on TV, on CNBC, or, you know, everybody who was covering it, you know, every network that was covering it, and then it goes. So the algos didn't dig down deep. They waited to hear it on CNBC and CNN and everywhere else that was being covered, and then they exploded it. So unbelievable inefficiency there, which we were able to take advantage of. Now, I always sell too soon, but I know Big Bill D, you took out 5 points on the STN room, so great job, buddy. What does this all mean?
I want to ask you before you say that. Like we knew this with Apple. Like the algos were headed. They bought this thing up all day yesterday. I mean, What was it with the algos? Do they need to hear it? Does it
Yeah.
need to be filtered?
Yeah.
They do.
Yeah, when they hear Trump, right now they are just so in tune to anything that Trump says. Case in point, a truth came out this morning. We're going on a quick 1-minute tangent. Truthing, Mr. Donald Trump, Intel CEO must resign. Boom, Intel down $1. And it was actually up ahead of that. So it's down like $1.40 on that truth. So right now, anything he says, mentions a company, it explodes. Company, mentioned negatively, it gets murdered. I mean, there's nobody in the entire universe right now more influential than Mr. Donald Trump. So love him or hate him, you got to listen to him if you're a trader, because he is moving price like never before. And that was last night. All those companies were in the press release, but then when they start getting mentioned from the president, Micron, he specifically mentioned Micron, watch it explode 4 straight dollars. Like huge moves. You can see it right there. It gets the mention just after 5:30, and bang, the stock's just off to the races here. It's all that matters. Now, this was so interesting to trade last night because there was so much information here. So he comes out and he says that there's going to be 100% tariffs on the semiconductors. And the semiconductors, bring up the SMH, bring up NVIDIA, bring up AMD, get slaughtered. Like the algo's just like, oh my gosh, like we didn't see this happening. They had already announced that there was going to be like it was all day, the last few days. AMD bloody warned about it in the press release or in their earnings report. They were talking about it. So we knew this was coming, that there was going to be a chip tariff. Gets announced. The algos just hammer the chip stocks. AMD trades down to 160. Yes, last night, that's where it was. I know it's 166 right now. About $3. NVIDIA straight down. All these stocks straight down. But like we were saying, we were chatting in the STN room, and I'm like, well, wait a second. We already knew this information. 1, 2, they just said there's going to be exemptions if you are actually going to indicate that you are moving production to the U.S. So it's not even about having production in the U.S., it's about moving production and indicating. So as long as you're just indicating that you are moving production to the U.S., there's going to be exemptions. So, algos are too stupid to realize what that means, but human beings who were buying the dip last night realized that, and we tweeted that, and I said, I don't think these stay down. I said it in the STN room. I think the dip gets bought because, like NVIDIA was down $2, and I was like, well, they just told you there's going to be an exemption, though, if they're indicating that they're going to move production in the U.S. So it's not even about having production in the U.S., just indicating that you are moving production to the U.S. will give you an exemption. So all of a sudden, now we have a green light go, because all these companies that were worried about tariffs now just have to indicate that they are moving production to the U.S. and they will not be tariffed. So I would think all of these companies are going to indicate that immediately so that they don't have to be tariffed. So this is like a huge loophole that I'm assuming most companies are going to go through. And that, my friends, is why we are up here this morning on the SMH. That, my friends, is why we're ripping higher, because Trump just gave a huge loophole for all these companies. Now, he did say, if you indicate and then you don't actually go through with it, we'll go back and get you. But, I mean, the market isn't worried about them going back and getting them. They're just worried that, hey, we've got a loophole here that say, yeah, we'll commit some money. We just saw Apple commit another $100 billion, and they're like, okay, now they get exemptions. We'll get, NVIDIA probably has been buddies with Jensen Huang, so they're indicating. I'm sure all these companies are going to indicate that, yeah, we'll do some production in the U.S. here, and then we don't have to, and then we're exempt and we don't have to worry about the tariffs. So huge loophole here that the companies are probably going to exploit. So this, my friends, is called the Tariff Exemption Rally, which is the name of the show.
Can you imagine? I mean, I have great thoughts and I have great thoughts, but could you imagine what PMP would do if you moved from Canada to the United States and we produced the show 100% in the United States?
We shouldn't even tell that I'm Canadian, because they're probably going to tariff our show. So we shouldn't even tell that part there. So
I think
everyone
knows. I think everyone knows. Do we want to do any of the individual price action here, or we just want to move on?
No, we do for sure. So let's go to Apple, because this is one of the biggest two-day moves you will ever see in Apple that are non-earnings related, really. We had the earnings report and we sold off. We rallied initially in the earnings report 4 days ago, sold off, bounced, found support, triple bottom the same 200 area, but then we get the big U.S. first, like that. We're going to produce in the U.S. rally. Apple finding Tim Cook, kissing butt. That's what Trump likes. He was totally kissing butt last
Like
night.
Brian Moynihan did.
That's what they do, but that's what Trump wants. So Apple's now back in the good books. He's back in Trump's good books. And this is exactly what the market wants to see. That, wow, Apple is now under Trump's wing. Tim Cook and him are buddies now. And all of a sudden, as much, remember Elon Musk and how much Tesla rally had, when obviously Elon Musk were. Now Tim Cook is friends here too. So you're getting we're friends with the president rally here for Apple. And that's the 2-day move, 202 to 219. Incredible move.
I was looking at this yesterday when the move started, and I used, rudimentary technical analysis, which was absolutely wrong. I thought, 207, that was where all those old lows were. I thought it might blink there. It didn't, and it kept on going, and then the top of the trading range was 215. And in the afternoon when I was on with Tricky Nikki, she said, What do you think about, or maybe it was in the final show, and she said, what do you think about Apple? And I'm like, I just thought, well, that's a big move, and it's the first day. So I was thinking, 2-day move maybe. I had absolutely no idea that, that they was going to get another. This has to be one of the biggest 2-day moves I've ever seen in Apple. And Brent, didn't we have Dimitri work on a tool for us where we could go back? Remember that back in the Benzinga office where you could go back and get historical precedences for moves? Remember that?
Yeah.
I sure wish I had that now. You blasted the 221. I mean, I'm not going to say anything. You got targets in these areas. You take them. I mean, biggest 2-day rally I've seen in that. I don't know, since COVID. I don't know. This is the big move, and you're right. He's back in favor. When are those factories going up? Tomorrow?
And here's another thing too: is everybody's thinking, they're going to make iPhones in the U.S. Tim Cook did not say that at all. I watched that entire interview here. They talked about the Apple Watch. They're talking about, iPads. They're talking about some different things. And again, it could be some parts made. It's not like the entire production is going to come over here. It wouldn't be like you would see the profit margins shrink so tremendously if that happened. They'll make some stuff, some parts, some things over here. But, again, this is a huge loophole, folks. Trump just gave all these companies the biggest loophole ever. Just indicate that you're going to do some production over here and you'll be tariff-free. So what's $100 billion for Apple? Drop in the bucket, really.
Nothing.
And it's $600 billion someone was already committed. So it's a huge number for most people. But for Apple, it's kind of a drop in the bucket. And that's where I'm thinking, this is just the big loophole that he just opened up for all these companies. And so I think you're going to have multiple companies coming in and obviously talking about this and, we'll move production over there, Mr. President. We'll move production over there. Good. You don't get tariffed. And then they're going to stall. And, we're getting these factories going. They're going to stall. And they're trying to wait 3.5 years. Tell Mr. President may not be in power anymore. So I think that's what's going to happen here now. But more loopholes here, more exemptions is basically what this is. Tariff exemption rally.
It was interesting, too, in the Apple press release that the Apple press release was basically titled the American Manufacturing Program. And it's for a term of 4 years. Hey, what do you know?
Yeah, exactly. Why is it a term of 4 years with 3.5 years left with this president? Why didn't they go 5 years or 10 years? It's a great point, Brentster.
The pre-market prep room, the STN room, they were all over this when we first heard about this. Like a ton of people in the chat were like, there's going to be so many loopholes of this. Apple's going to indicate and then pull back. And yeah, it's very interesting. We're in interesting times.
Very good way to put it. But you know what? I think this could be a big catalyst for Yum Brands, because the taco trade, tacos are back. The tacos are back. This is a little bit of an inverted taco trade, but they're going to be flying off the shelves because this is a very indirect way of seeing this. But you know what? The net result in the market is bullish. We care about the implications of it, and price don't lie, right, Dennis?
Yeah, so let's go back and just do, break down technicals on Apple because we didn't get your levels here, Joel.
Oh,
so I want
man.
to just go back in here and look because we talked about not seeing the 2-day move. Is this the potential for a 3-day move? What are you seeing on the charts?
I don't, man. Okay, so you broke out of the top of this trading range. So right now, a gap fill. Dennis, you love 221.02. That's a gap fill from way back here in April. If that was your objective, then you might have missed it. But that's it. 221 gap fill in Apple. And then I'm just, if it fills it, keeps going, I'm gonna lay off. This is an extraordinary move for Apple. If I had some weeklies or zero DTEs on or anything, man, they're gonna be just juiced at the open. So 221, that's my level potential. And I'm gonna make that a half-star resistance. I'll give some updates during the day. But I just half-star resistance here in Apple.
I mean, and such big moves in all these other components here. One stock I do want to focus on is Micron because this stock has been beat up. DRAM prices have been falling. Stock really hasn't done well since, the last, I believe it was the earnings report. It's been just leaking. Is this the catalyst to get the Micron turnaround started? What does it show in the charts?
Micron is looking for a catalyst and potential catalyst. I mean, this thing had been leaking since earnings. I tell you, I would be more prone to chase Micron up 482 than I would Apple up $6 after the move yesterday. Right back at the 50-day moving average, 114. I thought they just punished that stock off a decent report. So big catalyst here. If you don't worry about gap fills, close your eyes and buy it. Low of the move was way down there at 105. So liking the Micron setup better than the Apple setup.
So obviously we had all the Trump tariff news that was really moving stocks around last night. We've had the turnaround because algos finally realized that this is good news because it's all full of exemptions. I mean, the S&P is making new highs here, and this market is just so resilient, and it's so difficult to be a bear here. And I guess we're not quite to all-time highs because we got a little bit higher 4 or 5 days ago, but it seems like inevitable here. It just blindly buying the dip seems to win money as long as you're in the tech trade, as long as you're in the S&P, as long as you're in the Qs, as long as you're in the love darlings here. The question is, if you're not in the tech trade, then the buy the dips are not working. We saw this with healthcare stocks. We continue to see it with drug stocks. They rally for a day and then they sell back off again. Million people indicating that UNH had bottomed, yesterday, and then it sold off $5 again. What about Eli Lilly? Because this stock here was once the darling of Wall Street 2 years ago, even 1 year ago, when everybody was going and giving themselves jabs to lose all their money. And, this stock has fallen out of favor and it is in the dead wrong sector. Lilly does come out with awesome results. 631 versus 553. 15.55 billion versus 14.38 billion. These are huge beats. They raise, folks, raise EPS guidance from 2017 to 2165 to 2085 to 2210 on EPS. They raise sales guidance. They raise guidance across the board. So why the hell is the stock down? They're raising sales guidance. They're raising earning guidance. They kill the bottom line. They kill the top line, and the stock falls 100 points because the trial for their oral drug was just a smidgen light. They were expecting weight loss of around 15%, and the obesity pill, we're talking the pill here now, only produced 12%.
Oh,
that's worth 100-point sell-off in the stock. That is where we are right now. The one major issue for Lilly, though, and why I am not going to probably I'm not buying the dip today, is because it's in the drug sector, and the drug sector is hated. An STN room, we were making lists last night. Have your lists, hated stocks, and others. There is a whole pile, like so many hated stocks that are just absolutely not participating. The entire healthcare sector, the entire drug sector. And then you can go into stocks like specifics, like Intel. Hated. If your stock is on the hated list, good luck, because this market is all about momentum and all about stories and love stocks. They hate value stocks. Hate. hate, hate. Yes, Berkshire Hathaway bounced back the last couple of days, piggybacking off of Apple because they still have a big holding in Apple, but still overall hated now because Berk is full of value stocks and not sexy AI darlings. So I think it's a very important exercise for everyone listening to this room to define which stocks are loved and which stocks are hated. And it's easy to tell. You look at the chart. If your stock is swimming back at its April lows, it is on the hated list and probably not in store for any turnaround rally anytime soon. One point in time, the AI bubble air will come out of it and the study stocks will have their day or two. We've seen that happen over the course of the last few months. They get their day or two, but there's never any follow through. So you just got to go through and have your loved stocks and hated stocks. And there are so many that are absolutely hated here. Unfortunately, I believe Lilly is now in the hated camp.
Big run up, wild price action. You did have an opportunity to buy the dip. As this thing actually does, went to, I don't know if you saw this print, it went to 639. 639.
The algos just see the light. And again, they're looking for an excuse to sell the stock because one, it's in a hated sector. So they're looking for an excuse to sell. These earnings were fine. I mean, they missed by 3 percentage points. So it wasn't like, oh my gosh, this drug doesn't work at all. It worked a little bit. The pill wasn't that bad, but the pill wasn't good enough. It didn't beat expectations. Expectations were 15 in the pill. And obviously the pill going forward is a big deal because you know why? Because everybody else is coming out with a pill. And I'd much rather take a pill than have to stab myself with a needle in the stomach, however often you have to do it. I don't do it, so I don't know how often it is. So that's where the pill does matter. And we have the other rallies in the other drug sectors. VKT, or in the other drug makers, VKTX is trading up 9.82% because there's expectations that their pill might be better. Ooh. Novo up 8.48%. Expectations that their pill might be better. Amgen is up slightly, but Amgen isn't seen so much as a weight loss play anymore, but it is. They've got a pill they're trying to work on as well. It's up 1% here. But, direct peers GPCR is another one there. It's up 8%. So Lilly's loss is these other stocks gains. Does that mean I'm coming in and buying all VKTX, nope. GPCR, and MBO? No. Why, folks? Why? We just went over this for the last 5 minutes. Why? Why would I not buy a bounce in MBO?
Because they're not on your love list.
Yeah. If it's on the hated list, you don't buy it when they're up 10%. Now, there's going to be exceptions, and if NV goes up 15% today, I will have 10 messages at me and say how wrong I am. But I'm telling you, these stocks, absolutely, the sector is hated here right now, and rallies more likely to be sold than to have follow-through buyers. So keep that in mind when you are trading. It is very, very, very important.
For you VKTX traders, I don't know, I know Intern's been following this one for a long time. What a big area, Intern. I mean, yeah, of course it spiked to $37. $36.90, that's a spike, but look at this $35. $35.25 is what I'm going to call it. $35.30. Those are your highs from the last 2 months. So big level to get through. Already up $3. I'm sure that's way above the expected move. Dennis, we had not an argument. We had a discussion a while ago about, the I don't want to say fat drugs because that's not nice. The weight loss drugs. And and then I talked to Lisa about it. She's like, yeah, the drugs are okay. They can get you going. But if you don't adjust your diet, if you don't ride your Peloton, if you don't walk, then, it can only do so much. And I think that's kind of, you gotta eat healthy. You gotta swim. You gotta do these things.
Well, you sound like JFK Jr. That's where he's at on this. And he obviously is fighting these stocks here too, because he thinks all about exercise and being healthier lifestyles. That's great. That's worked since the beginning of time.
Yes.
Unfortunately, people are lazy. Unfortunately, not everybody's going to get on their Peloton and run and swim, at 5 in the morning every morning. I'm one of those people. I'm lazy from physical activities. Not great. Wish I was better. I was talking with my buddy Matt yesterday, and he's like, I need to start, doing some more exercising. Lots of people need to start doing some more exercising. This is more of the easy way out, Joel. because it makes you stop those cravings for all those sugary foods. So it actually does adjust your diet because you don't crave all that stuff. Like you think about, oh, I just want an ice cream cone. Oh, I just want, like a chocolate bar. I just want a bag of chips. It stops those cravings. So this is actually the easy way out. Yeah, in a perfect world, you're doing, exercise and you don't need these drugs. But it's not a perfect world and people aren't perfect. And that's why these drugs, people go to these. And there are people who are not exercising and losing weight. So the drugs actually are working. Does that mean I'm buying all these stocks? It just brings us back to the same thing, though. Drug stocks are just hated right now. I don't see any imminent turnaround. I don't see any reason to chase these things.
I'm gonna just give you a monthly level in Lilly. It's 677. If you wanted to buy this at the April low, well, go right ahead. That also that area was also a low back at 24. Pre-market low 639.
We've got Craig Johnson going to be coming on the background here in a couple of minutes. We could go to Craig early here because he's waiting. I don't like Craig Johnson waiting. Because
we cannot keep Craig Johnson waiting. Craig?
We cannot keep Craig Johnson waiting. He's here early. We are here for you, Craig. He's got the thumbs up and ready to go. Special 820.
Craig Johnson, managing director, analysis over there at what's it called? Piper Sandler. Greg, I just want you to know that we just broke precedence here with the guest being in early and bringing it on early. But if we do it for one person, we're going to do it for you. How you doing, Craig?
I'm doing well. Can you guys hear me okay?
We can hear you. We can see you. We love your view. Is that a real or is that fake?
That is real. Piper has moved. We moved offices in downtown Minneapolis, and we are now overlooking the Twins Stadium. I'm not enough of a VP to have to watch a Twins game while I'm working, but
awesome.
I can do traffic break-in reports for you, in addition to talking about charts if you like to.
Weather reports, traffic reports. He can do everything right up there. It's a little bit cloudy out today, but traffic's good.
Coming into the C ramp this morning, and therefore there is no congestion. Come on into work, So yeah, we can handle that all for you.
Awesome.
But in all seriousness, let's talk about this market. I mean, people hate this market. Broad picture perspective, right? And I'm going to share my screen. So let me get this rolling here, right here. And we are going to share a screen. And let's see, did I pick the right one? Windows entire screen. And we are going to pick this one right here. Okay. Now, so we just put out, can you guys see this okay?
Perfect.
So we just put out
investor.
We just put out the Informed Investor, and with the title of Support, Resistance, and Reality. And stuck with our 6,600 year-end objective, which I do think there will be upside to that, but more to come on future presentations and discussions. But here's the thing. Using charts, as you all know, is excellent in terms of helping us to find risk reward. But the reality is, for a lot of investors, they're fighting this tape. You've got a market that's making all-time new highs, whether it's the S&P, the NASDAQ, RIY, the mid-cap with RDG. Breadth of the market is great with the NYSE, the S&P 500, advanced decline lines making new highs. We're not overbought on the 30-day overbought oversold oscillator. Leadership of the market hasn't changed. Everybody's fighting it. And I would also just tell you that cash, it still remains somewhat elevated at this point in time. We created an interesting chart this month where we went back and we looked at some of the Lipper money flow data and compared total equity assets to the actual amount of dollars that are sitting in money market funds. And we're still at some pretty elevated levels compared to history. So I think we need to see money continue to keep coming off the sideline, and hence the tagline for this month's book, which is buying the dips, not selling the rips, I think is what we ultimately need to do in this marketplace right now. And the FOMO trade, guys, is absolutely real. It is real. people just cannot get their mind around getting on board, buying equities, getting on with this market. And we made a lot of changes to the model, and we can talk about some of these charts. I could pull them up for you, but these were the stocks we added into our portfolio this month right here. Okay. And the thing that I want to say to everybody, let me slide this aside and let's pull up some charts right here. Okay. But take a look at this. If people tell you that the economy has got challenges, well, what do we think this chart looks like? Like housing. I mean, it's a lot better than a lot of people think. Also, look at this little small cap darling, right? Big downtrend reversal in the making. It's already happened, and we're back above a 50 and 200-day moving average. Like, this stock's going to trade back toward, in my mind, 260 is where this thing is probably going to trade up to. Looks like it's having a pretty decent open here potentially today too, right? Take a look also at stocks like BLD. Look at the sort of price action you're getting there. I mean, even look at Home Depot. Okay, starting to turn its way back up. So if the economy is all negative, as people are trying to say at this point in time, why are all these sort of cyclical economic sensitive charts doing so well? And again, everybody loves tech. I love tech too, but I don't need to come out and buy these guys until I get a deeper pullback. And I'll buy these guys 130, 140 range, but I don't have to buy it here today. I'd be out buying Galaxy. Okay. But if you want the backdoor way to play Circle, buy Coinbase. Stock gap down. Eventually you'll find your support somewhere probably, in this range where we're about where we're at, and the longer term uptrend will resume. So there's just a lot of stocks to buy, but I'm going to stop there because I know that you guys got questions for me. I did hear you talking earlier about Lilly, and it's like, yuck. I mean, I know it's open lower, but now you're starting to take out these support levels, and so many challenge healthcare stocks out here right now.
Yeah.
Healthcare stock that I would buy. By the way, we're taking out these lows in here, which is going to open up a whole nother leg lower. Look at this other one. Like, this one can't catch
awful.
Can't catch a break. And I got everybody calling me up, oh, you got to buy United Healthcare. And I look around and I'm like, yeah, no, right? Like, something is wrong like this. Like, I haven't seen charts this bad since Enron and WorldCom. Did I just really say that? I really said that. Sorry.
Craig, we were doing this exercise before you came on, and we were coming up with a hated list and like the loved list. And I think it's kind of what you're doing here as well. Like, I put the entire healthcare and drug sector in the hated list. Like, yes, these stocks are cheap on a valuation perspective, but if you think about it, you got Trump trying to bring down drug pricing, trying to get healthcare cheaper for everyone. I mean, there's some fundamental reasons why, when the president's kind of against your sector, maybe it's not a great place to be. And then, UNH has had all kinds of problems, investigations, everything else. I mean, this is a clearly hated stock.
Clearly hated. And there's clearly documented discussions that there's investigations. Again, I'm not making that up. That is in the papers discussed. Yes. And again, that hasn't been resolved. And again, that's got to get resolved before you can even think about fundamentally wanting to own this thing, because the uncertainty is just way too great.
Well, that was my next question. Like, Intel would be in the hated category as well. It's gapping down here again today. Negative president mentioned saying the CEO must resign. When is the time to actually buy a hated stock? So this is a general question for you. Like, is it when it gets above a certain moving average? Is it like when it starts getting the momentum going again? Is it just when it's so washed out, like downside capitulation, that everybody is out and starts rallying on bad news? Because everybody wants to be a hero. Everybody wants to buy UNH and the stock that's down the most and say, I call the bottom. When is the time to actually strike on something like that?
So let's go through how I would do that, right? Okay. So take a stock like Twilio, right? Here's an example of a stock that went from $454 at the lows, was $40, right? Now, when do you want to buy this, right? You want to buy this when you start seeing a period of time where the stock is going sideways, okay? And then when you finally break out of that sideways consolidation, because your risk is you could be too early. You could try to pick off the stock somewhere in here on, an initial downtrend reversal like you did here. You could try to nibble at it here, but you really don't get the flows going until you finally take out a couple of these highs through here. So this is where I want to try to find some of these stocks in here when they kind of start to go sideways for an extended period of time and then finally break out. Then you can chase that initial rally, take some profits, wait for the pullback to where you broke out from, and then you can safely buy it again for the next leg up. You can also do that same sort of chart with, the Roblox of the world too. I mean, again, sideways consolidated for a long time and then finally broke out again. That would be another example of where to do it. This was all just pain and noise down here.
Yeah.
Okay. Coinbase did something similar for a long time too. Like you had your downtrend reversal, but it wasn't until you finally broke out, retested support that you kind of got that leg up. And that's how I try to play some of these types of stocks. Another one that kind of had a great week too has been the Lemonade. I mean, same kind of thing. You waited for the downtrend reversal. You knew it's going to take time. You don't fix these fundamental problems at companies that go from, as an example, $176 to the lows at 10 without having that period of sideways digestion. Ralph Acampora would call it chicken tracks. When these things just go sideways, chopping around in here, and then you finally break out, you could buy that initial break, and then your best position to buy is on those sort of lows in here.
The little comeback. Now, I want to throw you a curveball here because I don't know what to think about this one, Micron, because this was an AI darling just as much as a month ago. DRAM pricing's been coming down. The stock has come in. Is this a check back here, or is this the start of something more concerning here for MU?
Well, let's take again, this is longer than a lot of your listeners like to think about, but step back and always look at the very, very, very long-term picture. I like to look at a monthly chart, okay? And when I come in here and I see that these guys have finally, since the year 2000, broke out to a new high, I'm like, wow, okay, this is telling for me that we finally are able to break out. And when I look at this breakout here, we broke out, we then came back, retested, and now we're starting perhaps the next leg up. Like the trend is clearly higher. So how do I want to play this? I want to play this still to the upside. And then I'm going to then narrow down into a weekly chart to go take my next look at things and say, okay, what's my setup here? Okay, probably have the 200-day here at 98 as sort of downside stop out type level. If we're going to open this thing at 113 on this thrust up, I want to get above 130, and if I can get above that, now I'm doing higher lows right from here to higher highs, which is going to be further confirmation that the intermediate term trend on the weekly chart is up. And then I will come in and look at the daily chart, narrow it down a little bit further. And again, think about the setup from that perspective too. Lots of resistance right in here that we need to take out. So start big, intermediate, shorter term, and just realize that you always want to trade things in the direction of the preceding trend. And if you choose not to, be well aware that you're trying to play sort of a counter trend trade.
Moving on to other sectors here, because obviously tech has driven the bus here and we all want to talk tech stocks here. But what about the financials? Because this one has mixed results here as well, because we've seen the XLF hold up fairly well here, but, not going anywhere for the last 2 months. Overall, XLF obviously, has underperformed technology, but in the last 5 years still, like if you do your exercise up, is this now again, consolidation? You like the financials here. What are your thoughts?
So yes, we are overweight financials. And what I would say to all the listeners here this morning is big picture. You want the financials at least participating in this market, because if the financials ever start really diverging from the rest of the market, we got issues. And that's exactly what you saw in 08, 09. And if you start seeing that divergence, then go start looking at what are we seeing with credit spreads. If credit spreads are beginning to widen out, then you want to be super nervous about this market and reduce your trading sizes and positions and those kind of things. Specifically with this chart here, I just think we're kind of sideways digesting some of these bigger moves that we've had over the last year or so. And as long as we stay above the rising 200-day, I'm okay with it. Like I'm good with financials. But where I want to really be inside of the financial sector is not necessarily all of these. Some of these regional banks have not been quite as constructive, but where I have been positioned for people has been these names. I just added a position for Bank of America. We've got Mr. Cooper Group on the financial services, which has been a great stock. Synchrony Financial on the credit cards. Goldman, it looks like banking and those things are doing well. Robinhood, obviously crypto, TradeWeb. These have been the places that I want to be. It hasn't been as much focused on, say, the regional banks. But yes, do we own Huntington? Yes. Do we own America? Yes. But part of this is a portfolio that we've got that we want to have some diversification in. Does that make sense?
Yeah, no, great explanation there, Craig, as always. Okay, another curveball going back to the tech sector, because I got to get your thoughts, and I love getting your technical takes on stuff. What about Tesla? Because this has been a consolidation station here for a long time here too. Musk had the love, with Trump. Now, they're in the feud, and now it's just kind of been silent on that. This has been a stock that has definitely been a consolidation station here too, and now for quite a long period of time. I mean, you could go back. We've not even got close to where we were at the end of 2024, $470. And if you go out even farther here, I mean, we've really gone nowhere here for the last 5 years at this point in time. We had 300 back in 2021. We're still 300 here today. Is there the case where Tesla can go higher?
Absolutely. And I sort of look at what we got going on here. And I did not draw this perfectly.
That's pretty good
on this, but close enough. I view what we have happening here is the shorter term is a symmetrical triangle sort of forming in here. Okay? Yeah. And you can draw an even smaller version of that on a daily chart, but everything is consolidating here. And even the longer term, all the way back over the last 4 years, is a huge consolidation. I like what I see here, and the stock to me is setting itself up to go retest those old highs, 400 and change. It's working its way that direction. I'm a buyer of it. I like what I'm seeing, and I just want to look at one other thing real quick. I like to look at longer term. Let's see here. I like to look at longer term charts and come back and say, okay, if I was to put some sort of point and figure objective on some of these things, like where could this ultimately go? Right now, I don't have a buy signal on it, so more consolidation is probably what's going to be necessary for Tesla. But again, I like this sort of consolidation. If I'm more of a longer term holder, if I'm a trader, you're probably going to say, I'm going to wait till you break out of that triangle, either up or down, to have an actionable trade. So your time frame, Dennis, is going to be what's going to be important here.
Yeah, so maybe just play it safe at this point in time and let the market tell you if it wants to go higher or lower here. So if it breaks down on this triangle here, you'd be like, okay, I'm going to stay away. We start getting a breakout here, and then you'd be like, okay, green light, go.
Correct. And what's interesting is, like, so many individuals are just ignoring charts. Like, I had a conversation with an individual just on Monday. And they're like, oh, yeah. Okay, not to pick on this one too much, but they're like, oh, I'm out here buying this thing. And I go, well, where'd you start buying it? 500. And I go, dude, you're already been cut in half.
Yeah.
Oh, I'm going to keep buying it down here. I'm like, why would you ignore the chart? Why would you just not wait? Why do you have to be the hero to try to pick the bottom? Like, I see no absolute reason to try to do that. Like, miss the bottom 10% of a move, and you're good, because we're just trying to trade and make money, not trying to be the hero.
Yeah, like, how do you even come back from that? When a stock gets cut in half, it's got to double for you to get back to even here. And I mean, the overhead supply here is absolutely incredible. Bag holder central. I mean, we talk about this too. It's so hard for these stocks to get out of the doghouse, and that's really what it is. Like, when they go down this far, they're in the doghouse. I've been in the doghouse before, and it isn't fun. I mean, getting out of the doghouse, it's not easy.
Do you know what the downside objective on this is for a point and figure chart?
What's that?
I got to go to a monthly chart. Okay. But your downside objective for this is right here, $144.
People would just be losing it. if UNH
Oh,
went to $144.
There's 18 or 19,000 UNH employees in Minneapolis. I got to tell you, I'm going to get that house on Lake Minnetonka that I've wanted for probably a pretty good price.
Crazy.
What else did you have that you guys wanted to hit on this morning? Otherwise, I could certainly go through.
I want to ask about Apple. I want to ask you Apple because I think this is one of the biggest 2-day moves I've ever seen in Apple. Everyone knows the news now. I mean, does it change the fundamentals of the company? Does it change things? Where are you tactically on this? I mean, huge 2-day move. I would like to get your fundamental and technical analysis on Apple.
So, again, not drawn perfectly, but the stock has just been sort of consolidating. Like, if our goal is to make money every single day when we come in, right? Like, I've got a relative strength trend that's doing this, which tells me I'm not riding the fastest pony in the horse race. And right now, I'm just sort of consolidating. Like, Apple's a great company. I just don't think it's going to be the right trading vehicle for everybody at this point in time. Again, nice move up. Nice move up and stuff over the last couple of days, and we're going to open another 6 points higher today. But would I rather buy that, or would I rather come back and look at some of these builder stocks or some of these biotech stocks or some of these other things, right? Like, the chart setup is just not quite as amazing for me, respectfully, right?
Okay, that's fair analysis. No, that's great. Craig, so glad that you came on early, covered a lot of stocks. You've been helping us out, follow these markets for several years now, and I really appreciate it. Gonna get one of your colleagues on Monday, a new guest, Danny Kirsch, who heads up your options department over there. Is gonna be.
I love Danny. Danny does an amazing job looking at options and breaking these things down, and fantastic work he does. Let me just finish up with this on the big picture, right, for the market. So we're making new highs for these popular averages. It's being led by tech. It's being led by industrials. Financials are participating. I just think too many people are fighting this tape, and there's a lot of people that are calling for sort of seasonal weakness. Meaning that they think that August and September could be weak. It very well could be a little bit weak, but I don't think it's going to have the same sort of drawdown as we've seen sort of in historical periods of time, because I think too many people are playing catch up, and a lot of institutional investors are in a lot of pain right now because they sort of degrossed on the downturn back in the March, April timeframe, and they really couldn't get back on board and re-engage because they were convinced there were going to be more tariffs and other problems, and they sort of ignored what was happening with the charts. And again, I think our 6,600 will be achieved, but I think it's going to be earlier than year end. It's probably going to happen in the October timeframe.
Okay, we were just asked that about your upside target, and there you go, 6,600. That doesn't, the way this market moves, that's not too far away.
No, but there's, we'll readdress that target once it's hit, so we can come back to you and say, hey, we achieved our target, and then we'll lay out where the new direction is. We've been already working on some of those things, and I would not say that it's a downside target by any means, right?
All right. That's it for Craig Johnson. We'll be dialing you up again real soon. Thanks for your time, Craig.
Thanks. Bye.
Thanks, Craig.
Kind of quiet up here.
We did get a little bit of economic data there at 8:30 here. We kept Craig over time because Craig is awesome. Data didn't really move us much, so I don't even know if we need to cover it here. It's the same. Craig summed this market up so well. I mean, you got 23 minutes there of it's doing charts and looking at it all. And why be a hero in a stock like UNH? Like, this is really worth the show. You sum up the show. You put your stocks in two categories. Are they loved or are they hated? And if they're hated, don't add to them. Don't be buying them, because you know what? This is not the type of market. Sometimes you go into contrarian markets and hated stocks are rallying. But even having those lists is valuable, because when we go into those markets, at least you have your list ready. I mean, probably a lot of my trading is just having lists and knowing, those lists, when to execute. I mean, we do this in the Stock Trader Network all the time. Write a list, categorize all these stocks, put them in lists, and I think it's a good exercise to have hated stocks and loved stocks. Like, what's Intel and, like Pfizer have to do with each other? Really nothing fundamentally, but they're both hated. So in a market where all of a sudden, momentum comes off, those stocks get a little bit of life. And we saw that the last couple of days with Intel lifting up, Pfizer lifting up. It lasted all of 2 days because, then, the market's gone right back to Momo here again. But I mean, this is just the market that we're in. The strong get stronger, the weak get weaker. And there's a lot of stocks in between that do a hell of a lot of nothing. So I think we're just still back in like the Christian Fromhertz type market where, going after the Momo names, the strong market is working.
Are you drinking a lot of Celsius energy drink, Dennis?
Yeah, maybe, because Celsius is up 25% here today. I've tried it a couple of times, and I didn't like the aftertaste, to be honest on it. But, I mean, this stock has turned. So, I mean, this would have been a good one to give to Craig here. Has this actually turned enough from its downtrend here to be constructive and start looking interesting? I think so. I mean, we talked about the stock wins back in the 20s. It felt like it had put in enough work really for a year between, say, November of 2024 to like May of 2025, where we really kind of just went sideways for a bit, washed out low at the beginning of 2024. And it's feel like the story has turned here to a certain extent. The stock has stopped going down. Does that mean we're chasing a stock up 25% here? Probably not. Does that mean Celsius is a sexy AI story? Well, I see an I in the name, but I don't see an A in the name. So the answer is no. So I think, I'd be more of probably inclined to say there's still lots of bag holders in the 55, 60 area. Is there room to 60? Sure. Is there continuation possible here? Are there better stories and easier stories out there? Yes. I think the easy money's been made in Celsius for the last 3 months. I don't think the stock is going back to $80 or $90 a share. I think that ship has sailed.
They doubled the estimates on the EPS, and then they beat on the sales by over 100 million. But we talked about some clever, press releases for earnings, and what did Palantir said? They crushed estimates, right? How about this comment from this morning? As inventory is recorded on a first in, first out basis, the impact from tariffs was not significant during the quarter. So I don't know how they tariff a Celsius drink, but obviously getting a big move up $10, 1033. Let the dust settle. Your next monthly high comes in at 57.49. That's all you're going to get out of me on Celsius.
So many other stocks are reported. So we had about 300 companies report between the close of 4 o'clock and at this moment in time here. So if you have a specific company that you want to cover, give it to me now. Take your time for earnings here. I'm going to start picking them though. And I'm going to go back to last night here because we didn't cover this stock, but it's been all over the place. It's AppLovin, APP. The stock is doing a hell of a lot of nothing right now. So if you're listening to that sound, it's the sound of the options premium being sucked out of this stock here right now. Yeah, because it would have had a big expected move too. And I didn't look what the expected move was, but it was probably beefy. It was probably beefy. $2.39 versus $2.04. 1.25 billion versus 1.3 billion. So it's like nice being on the bottom line, but then a miss on the top line. Q3 sales, slight guidance raise, 1.32 to 1.34. Analyst estimates were at 1.31. So it's an okay report. And the problem is going into this report, it was kind of just okay as well. I don't know if the bar was high. I don't know if the bar was low. This thing has been rejected as an S&P ad multiple times and sold off substantially off it, and then keeps clawing its way back after it gets rejected here. 400's major resistance for this, Joel, but give me your thoughts here, APP.
No, you got it. We've been talking about this one. Rohit was looking for a gap fill, and I'm like, man, you got to knock out that 400 seller first. And here you are. You had the big dip under 340, but I mean, it's a setup. I mean, if you throw out all the pre-market action and the earnings, stock is consolidating, trying to take out resistance at 400. I think if you get through that, I don't know about the gap. I'm not going to get picky wicky on it, but this is a Michael Pachter favorite. Been talking about this on these networks. I think when it was actually in double digits.
Elf Beauty had a crazy move on its report, and the earnings were good. 89 cents versus 84, 353 million versus 349 million. And this stock ripped higher last night. Like, I mean, something fierce. They ripped this up to how high, Joel?
118.09.
I thought I saw it higher than that. I think you're wrong. Look at the other.
Oh,
sure?
The bar before. You're right.
Yeah.
124.95.
$124. The algos get all antsy in their pantsy once again. They think, oh, ELF, it's a low bar because it's ELF and not an overly loved stock. And here's a beat and a beat. We're just going to rip this thing up, 15%. Well, the sellers came in and they kept coming in and kept coming in and kept coming in. And now the stock is actually trading down 10%. So we are now a clean 25 points from the high that we made just last night. And one thing I will say is if you go out to your long-term chart, don't look at I like Craig's exercise. Start out with a monthly. Go way out there and kind of get a feel for really where this stock is going. Well, really, in the last month, two years, the stock has been going down. So I'm going to now say that ELF is in the hated category and rallies are to be sold. The rally was already sold. So if you're coming in here and saying, hell yeah, I'll buy an ELF dip, I know that stock's coming back. The hated stocks don't come back as easy as the loved ones. So this is a dip I would actually stay away from.
Okay, well, people are staying away from it. You see the monthlies. I just put a question mark here across the board because that's where it's traded at, $100. I mean, where do you go? Do you look for a gap fill maybe at 92.96? Maybe get back over 100. So ELF Beauty taking a hit. What about did this affect Estee Slaughter? Or
it did.
Ulta?
EL got an initial lift on it, which would have made Michael Burry very happy, and then has come back down. Now, EL is an interesting one because this has been absolutely hated for a very, very long time. But, this would have been a good one to ask Craig about here, too. When you go out to the monthlies, you're clearly in a downtrend. It's clearly not a pretty stock. But when Michael Burry dumped every stock out of his portfolio and bought EL, it kind of turned this stock story around to a certain extent. Do I think this is a turnaround story? No, but look how reluctant well, not even reluctant, it's up. So, I mean, that's impressive in itself, that ELF Beauty's down. Ulta holding up here too. So maybe more of an ELF problem. Ulta's been a comeback story like extraordinaire here. You always say choose company, three is a crowd. I would have said ELF and Ulta kind of company, and then, three is a crowd with EL on the outside. Is EL, question in the chat, replacing ELF in the twos company, threes a crowd? There's a good question for you. Maybe, just maybe, ELF is the one on the outs now. And EL's on the comeback trail. It's possible.
Okay. All right. We got time to sneak one more in?
Sure. We can go anywhere you want to go. But last night, IONQ. Let's talk quantum stocks here because IONQ is trading down here. This, everybody believes, is going to be the next big thing, quantum computing. We keep talking about the next big thing, what's coming after AI, what's coming. Well, quantum's going to be involved with all of it. IONQ, probably one of the best of breeds. It's been in consolidation station here for a while, though. It had the big run in October from 10 to 50, then sold off to 20. Now it's reluctantly been trying to get back over 50, like trying harder and not doing it. Now we're down here again here and starting to look like we're topping here once again. Is there a dip? Is this dip a buying opportunity? This one's a tough one. I'll throw it to you, Joel.
I'll just go to the recent low of the move right here, and the downdraft here, and that comes in at boom, boom, boom. Go to my daily. All right, I gotta get this off here. Let me just get this low for you, and that is 37.25 potential support. That was the recent decline.
9 o'clock. Conversation will continue. We're going to talk some imbalanced trades. Walmart 69,000 to sell. NE 65,000 to sell. Pretty small so far. NASDAQ imbalances will come out though. We'll look at some different stuff. Bank of America 78,000 to buy. We'll go over there on the Stock Trader Network. We'll talk a few more imbalanced trades. Join us, STN Room.